viewers, welcome back to Humble Traders channel. And quickly, I'm here to give an update concerning our live trades execution series part 3. I'm supposed to have given an update before the week closed, but I've been overtaken by events. I just remembered that I need to do that video before market opens, and I'm here to give you an update of what happened yesterday in the account. As you can see, this account is showing November 15th, and that is the same account that we had $1,000 in, which we took. We had a trade in gold open before we started the live trades execution series on that account, and then we noticed that gold was not yet ready to rally, and then we are actually closed the position, hoping to make it back up. And as you can see, because of the power of the strategy, we're already up $977 in profit. But then something happened that same yesterday. I think that it was is it called CPI, something like that. That was news called CPI, but this coincided with what? It actually coincided with a breaker. Breakers are something to reckon with in the market, and due to what happened yesterday, I'm prepared to now do another series concerning discussing breakers and the effect they have on price. And this video now that carries the update, but because profits were wiped off of the account, look at where we left the account as at yesterday market close. We did not trail stops. If not, we would have been taken completely out of these trades, and then we can start again at weekly open, but we didn't trail our stops. You can see the importance of also trailing your stops. We shall keep following up with this account as market opens, because we believe that we are going to enter a bullish week, and I have my reasons for that. Let me show you part of my reasons from a live from our MetaTrader app. Look, this was the move that actually came back and took like $700 off of that account, which we saw at over $900 in profit. This was a 250 pips move in the counter direction. You know, its account is enough to wipe off any kind of profit from an account. We were even lucky that we have enough funds in that account, so you can sustain the move and then ride it back up. So because we already broke this high before the move came, we expect this red candle to become bullish and trade back in the direction of the what? Of the uptrend, because you can see it's a daily candle, and the week we need to have let me check the weekly and show you what it became. Also, it also shrank into this, but this is also looking bullish. So by the time weekly opens, we expect more higher prices to come and put us back in even bigger profits than what you saw on the account. This is part 3, and due to what happened, I decided to do another series of videos to show breakers. We're going to see breakers because these are things you should understand. As you are having a hot strategy such as the SIWA strategy, you also need to understand some things in the market so that you will know when they happen and why they happen, and so you can protect your account better, as we are all here to make money, not to lose it, like I always say. So I'm going to do a series on that, but meanwhile, this video giving us a part 3 update of our live trade account is going to be linked with the first video I already did, due to this important event that happened, that this breaker now came and interfered with some profits from our account. I have done a video already. It should be considered as the first video in that series of which I may label the playlist as breakers and the effect they have on price. But for this, I will first of all post it due to importance of this event that happened, so you can all see and then watch it before other content will come in the same playlist. I also have other playlists in development, like the backtesting series, and we also have the is it SIWA strategy basics, or is it how deep can pullbacks go, is also a series on its own. So these are meant to like keep you guided and focused. Whenever you pick a series, you will see everything concerning that and around the same strategy, which is the SIWA strategy. So I will keep you posted on the development on this account, but I will merge these videos together since they are almost talking about the same thing. We report our trades and then we also give you uh, uh, another content that is also relevant to this, and then but we'll keep it as if it's coming in another playlist on its own. So stay tuned until we bring that content your way in a couple of hours. If you like what you're seeing here, don't forget to drop us a like to our videos and subscribe to our channel, and also interact with us at the comment section. We are glad to always be here for you to answer or attend to your questions by God's grace. Until we see in the next one, be safe. Back to Humble Traders channel. It is another weekend where we have an opportunity to study what is going on with our charts and review our trades from last week. As you can see, you may notice that we are viewing a different kind of chart on my screen. This is actually what you call the C trader. I remember I have it, so although I couldn't pop on all the indicators on the charts because the window where I will do the analysis will be too small, so I only use the EMAs with the exact same settings for SIWA Strategy. If you got on the trade of USD JPY last week, you would notice that we experienced a sharp pullback, which amounted to about 250 pips move. You see, that's massive. It's enough to wipe out accounts, and that necessitated that we should begin to look into how pullbacks happen, so that even if you know you are in the correct trend, there may come a time where you will see a sharp pullback, and you need to be properly positioned in the market so it does not affect you much, or even exit your position if you know you cannot fade the pullback. So if you look at the chart, this is a monthly chart, and we already have what we call the bearish order block, which is this single green candle, the highest one that you can view here before the massive red one. That is the bullish order block. And look at here, price was traveling up from here, and then it entered into the week of the bullish breaker. This is what actually caused that reaction, that it has to react. This is a monthly chart, for God's sake. It took time to develop up to this stage, so any move from that time frame is usually massive. And then the moment it went to as far as this, almost to the open of that weekly order block here. Look at how it sharply pulled back, and that's what we experience on the lower time frame in terms of what? A massive like a move like a falling knife on the lower time frame. It didn't wait for anything, it was just falling with only a small retracement in the upside. So you can see I was actually trading in one of my accounts, and I placed an order almost around here, very close to where it will end the move into the bearish breaker, and so I sustained almost all this move down. If I didn't have enough balance in that account, it would have been wiped out completely, and you would now think it is the strategy that is faulty. No, it's not. There are some chemistry you need to also learn concerning the candlesticks and how moves happen. Now this move is responsible for what you will see on the lower time frame as what? Massive red candles to the downside. Let's try to view this on the, and then I've also, if you notice those yellow lines, I have marked the extent, that is the high of last week's candle and the extent it moved to. and the extent the move, the bearishness moved to. You can see it just touched the tip of, look at it, the tip of it touched the high of last month's candle. Okay, and then it has already begun to retrace back upward. So I marked the extent it actually fell from, the level it fell from, and also marked the level it fell to. So it fell from that level to the tip of, to the highest level of last month's trading price. So that's what we have right now. Immediately it touched that last month's trading price, it has started showing signs of returning back in the direction of the trend. Let's view this on a lower time frame to see, maybe it will be clearer for us. Look at it. Look at it. That move. Look at how it traded into the upper yellow line. You can see that is the extent that price initially traded up to before it started to retrace downwards. And we can view it clearer on the daily chart. On the daily chart, you can see it in form of this very large red candle. Look at it. The very large red candle you can see here is that same move from the top of that yellow line to the bottom yellow line, and that amounted to the results that we are seeing in our accounts. A friend told me that his little balance in his account has been wiped off from that move, which is actually not surprising. And that is the reason why before executing any trade, you need to pay attention to the higher time frame and see, are you close to any breaker, and try to identify a breaker when you see one. And provided your moves are from higher time frame, so even the breakers should be investigated at that level, so you will know how to avoid any of such kinds of moves. Now look at these two yellow lines. That's 200 pips and 50 pips fall in price. Look at it. That's where you are seeing that coloration. It fell from actually the level of 156.50 to what? To 154. If you calculate it, you will get 250 straight moves. But now, thankfully, price is returning back in the direction of the trend. And this coming week, we shall notice improvement where some accounts will recover, mine inclusive, and then others will reposition themselves maybe to join the move and gradually travel back up and past that level by God's grace. Now, I have decided to use this platform, hopefully thinking that it will be, at least it will be more liquid than the MetaTrader I've been using, but it also looks like I will have to do more adjustments to this, so I may end up just using my tab, or better still, my laptop for most of these illustrations, because it is the illustrations that is the technicality of what we do, and that is what actually shows our viewers everything that we are doing. You can see even on the 1 hour chart, there is already a crossing of this EMAs. So for you to get back on here and really know what you are doing, that what you are doing is correct, since this is the second leg on the monthly, you can join from the bottom yellow line, and then the moment you reclaim any of these indicators, the blue indicator, you would have known that yes, you are finally moving back up. So I'm going to actually leave it at this. I just came with the backtesting to show you what happened in hindsight and to give us a feel. And I'm thinking I may just include this in its own kind of series, a playlist on how to identify breakers and their effect on price. So this can be viewed as the first videos in that series, even though if I upload it anytime soon, it is just going to serve as the first video of our backtesting, and I will do more and identify other breakers and the effect they have had on price, even though it is hindsight. But this one shouldn't even be viewed as hindsight because it happened just yesterday during market trading hours, and you can see all this move happened in one day. 250 pips is not a joke. It depends on the lot size you are trading. Some people must have made $2,000 off of this move alone, and it is a counter move. So let's keep it open for more study. As we do, gradually we shall all get what I'm just adjusting. What you are seeing is I'm trying to adjust the screen so we can view the chart properly, as I like to zoom in properly to show what I mean. Alright, and you can even see here, for instance, you can see the charts are clean here. Okay, so even if you want to identify a breaker, then look at it. This is one example of a breaker. This topmost candle that you are seeing on your way up is a bearish breaker. Okay, and if you are looking for a bullish breaker, then look down. The last red candle is actually a bullish, that was a bearish order block. A bullish order block is found on your way down. That last red candle there is a bullish order block, but the bearish order block is that green candle. So by the time you viewed such things on the higher time frame, as price is moving back up, it may just reach a critical area where it will react, and it will react like, for example, as price is moving back up and it reaches this area here, it may begin to experience some resistance also, because this will try to send price back. But because it is not a major breaker, it is just an intermediary kind of positioning here, so you can see it may just react briefly and then continue up. So these are issues, and they are supposed to be studied intensely, so we can be able to begin to know how to absorb the shock when it comes to us, or try to stay out completely until the effect fades out completely, and then we can rejoin the trade. So this is exactly what I intended to accomplish from this video. And even though I like the view, but it is kind of not doing what I like still for my analysis to proceed smoothly. So I may just go back to my MetaTrader for now until I get other gadgets that I would use, or I take the proper decision on what gadget to use in doing the analysis. If you're finding value from our content, kindly subscribe, like our videos, subscribe to our channel, and drop all concerns in the comment section, and we shall address them as soon as we see them. And remember to use this weekend to practice. You can practice everything you are seeing, okay, but you can actually zoom well, zoom to whatever level you want on this CTrader platform. It's just that I'm still having, this would have been better on a tablet, so I will work towards that. My tablet is a bit touchy, so I'm trying to fix it, and we shall continue from there. So we see in the next one. Be safe.